All right, let's dive right into the chaos. Trump just triggered what might become the mother of all trade wars, Bitcoin sliding faster than your DMs after midnight, and even Warren Buffett decided it's time to dump the S&P 500. Yeah, that Warren Buffett. Buckle up, friends. This one's about to get messy. So, the economy right now is giving us serious, what the heck is happening vibes. Trump's tariffs are not just threats anymore, they're actually about to happen. Remember when tariffs were just negotiation tactics, like empty promises at family reunions? Yeah, well this time Trump apparently means business, and that business could cost the average American family between $2,000 and $4,000 extra every single year. Think about it. Would you rather spend $4,000 extra on groceries or on an overpriced latte? Because, hey, avocado toast isn't going to buy itself. And here's where things get interesting. The US economy is like the popular kid who's suddenly getting ghosted. Mexico and Canada, our next-door neighbors, have basically said, "No thanks, Trump, we're done playing nice." Mexico's president literally came out saying, "No more submission," which sounds suspiciously like what I said after my last relationship ended. But anyway. Canada's Trudeau is playing hardball too, saying he won't drop retaliatory tariffs unless Trump cancels all his tariffs first. It's like watching divorced parents argue about custody, but instead of kids, they're fighting over steel, avocados, and maple syrup. You won't believe what happens next. This isn't just playground drama. All these tariffs and trade tensions are basically pushing us closer to a recession. Businesses are already announcing massive job cuts, especially in retail and tech. We're talking the worst job cut announcements since 2009. Yeah, you heard that right. We're getting 2009 flashbacks, minus the fun parts like low-rise jeans and flip phones. And speaking of economic flashbacks, Bitcoin decided to join the party with its largest outflow since 2021. It's officially entered bear market territory, dropping from $108,000 to around $80,000 in what felt like about 5 minutes. But seasoned crypto investors know this drill. Bitcoin crashes like a roller coaster at Six Flags every couple of years. Sure, you might lose half your money overnight, but hey, you'll have a great story at parties. Remember when I had $1 million in crypto? Good times, good times. But wait, it gets even wilder. Because guess who just bailed out of the S&P 500? Warren Buffett. When the Oracle of Omaha, who famously says, "Be greedy when others are fearful," suddenly decides to become fearful, you know something serious is up. Buffett is now sitting on a mountain of cash, $334 billion to be exact. He's either expecting a huge crash or planning the biggest pizza party in history. My money's on the pizza party, but maybe that's wishful thinking. Now let's talk about why this market situation feels so unstable. Did you know that only 7 companies are actually responsible for most of the gains in the S&P 500 right now? That's right, 7 companies, mostly big tech. Think Tesla, Apple, Amazon. If these big guys sneeze, the whole market catches pneumonia. Tesla alone already fell 40% from its recent highs, pulling everything down with it. It's like your overly dramatic friend at brunch. When they're upset, suddenly everyone's weekend is ruined. All right, let's pause for a sec, because it's time for a little financial self-defense training. You see, most people think, oh, a market crash is great, I'll just buy everything on sale. But here's the problem. Most people say that until their retirement savings vanish faster than ice cream on a summer day. So, let's break down exactly how you can actually survive this mess without having a meltdown. First, and this might shock you, stop panic selling. Seriously, panic selling during a crash is like jumping out of a plane because you hit turbulence. Chill out, sit tight, and remember, markets recover. They always have. Unless the world ends, in which case we all have bigger problems, like figuring out how to survive a zombie apocalypse without Wi-Fi. Secondly, diversify. I know, diversify is like the kale of investing advice, boring but annoyingly effective. Don't put all your money into Bitcoin just because Elon Musk tweeted something funny. Spread it around. The more places your money hangs out, the safer it is, kinda like hiding candy from yourself around the house. Third, keep buying consistently. This sounds insane during a market downturn, but it's literally the smartest move. Study after study shows the people who buy consistently during crashes are the ones who retire comfortably, while the panic sellers end up telling sad stories in dive bars about what could have been. Okay, let's crank up the drama again. Here's the kicker: Jerome Powell and the Federal Reserve, the group who basically control the money tap for the entire economy, aren't going to rescue us anytime soon. Inflation was supposed to drop enough to make them cut interest rates aggressively, but that's not happening. Instead, thanks to these tariffs and geopolitical beef, inflation might stick around longer, keeping interest rates painfully high. This scenario even has economists whispering the forbidden word, stagflation. It's like inflation and recession had a baby, and that baby hates you personally. But wait, there's another twist. Consumer confidence just fell to its lowest since 2021. Basically, people are freaking out, worried about their jobs, their future, and whether they'll afford eggs next week. Ironically, that panic might actually help inflation cool off because scared people don't buy overpriced avocados, forcing prices to drop. It's a weird, twisted silver lining, but hey, we'll take it. Speaking of weird twists, remember when everyone thought AI would save the economy? Yeah, about that. The Wall Street Journal literally compared today's AI hype to Cisco in the early 2000s, right before the dot-com bubble exploded. It turns out throwing money at robots to fix all our problems doesn't always work out. Who knew? Okay, deep breath. I know all this sounds wild, scary, and confusing, but let me hit you with some facts to keep you sane. Over any 20-year period, investing consistently in the stock market has literally never lost money. Never. Even if you went all in at the very peak before the worst crash ever, you'd still end up richer 20 years later. It's almost like the universe rewards you for putting up with all the market's emotional baggage. Now, let's wrap this chaos burrito with a little wisdom. If you've learned anything today, let it be this: the economy is messy, politicians make questionable choices, and markets go up and down faster than Taylor Swift's relationship status. But sticking to a solid investment strategy, steady, calm, consistent, works every single time. Before you sprint off to check your Robinhood account, spoiler, it's probably down, hit that like button and subscribe. You've come this far. Don't leave me hanging like Bitcoin at the peak. Drop your spiciest hot takes down in the comments. Are you Team Buffett sitting on cash, or Team Buy the Dip because you live for the thrill? All right. That's enough economic madness for one video. Until next time, this is the comment section with Thomas Paul signing off. And remember, panic selling never looked good on anyone.